Welcome to the Capital Spreads Weekly Update. Today is Wednesday the 20th of July 2011. And a week that commenced very badly. We seem to have recovered somewhat from the lows, once again bouncing off around the 5750 level for the FTSE, and it looks like sentiment has changed somewhat from a few days ago where there was weakness setting in, and Tuesday, Wednesday we've seen a relatively good bounce. And it would seem that the reason for that is certainly one of two elephants that are in the room at the moment. The first being the US debt ceiling seems to have left the room. It looks like we're very close to a resolution there. More on the second elephant that remains firmly in the room in the theme of the week. But it's not only that, the soon to be expected resolution to that debt ceiling in the US. It's also good US corporate earnings, but US corporate earnings as well as good European corporate earnings on the whole seem to have lifted us somewhat. In particular, the big names on Wall Street, for instance, Apple, some amazingly good figures, and that really has just lifted sentiment somewhat and caused us to bounce off the lows. So FTSE around 5850 at the moment, the Dow 12,580. It's also lifted the riskier currencies a little bit, so euro, dollar at 142.00 and cable at 161.45. For gold, which on Monday hit a new all-time high well above the 1600 level, we've just seen a little bit of profit taking back down below 1600, so at 1595 for now, and Brent is at 118. So it looks like sentiment just seems to have shifted somewhat in favour of the bulls, and clients have actually remained relatively long the FTSE. It's not a huge position that clients maintain. They've been buying throughout this weakness over the last few days, and ever since we bounced, that position just seems to have got a little bit smaller, but on the whole, clients still long the FTSE. On the currencies, they are still a small short of the euro, so opposing euro-dollar's strength, and on the whole they remain pretty long the dollar. As ever, gold and silver, clients pretty firmly long that, so obviously expecting gold to get back above that $1,600 level. For the rest of the week, there's quite a lot to consider. The main thing, of course, is tomorrow's EU summit. But we've got PMI numbers from Germany and the Eurozone. They are expected to decline a little bit, but most crucially remain above the 50 level. That would suggest expansion. We've also got UK retail sales tomorrow too. So UK retail sales, which really over the last couple of months have very much been stagnant. We saw good retail sales in April around the royal wedding and Easter. In May they dipped back, but in June we've seen a lot of discounting from the high street, so that should have attracted consumers back into the shop, so we should just see a rise there. But as mentioned, all in all, UK retail is very much stagnant. And then on Friday we've got a German IFO business survey, so that's going to be focused on a little bit. Now the theme of this week, as mentioned, it's the second elephant in the room and tomorrow's crucial EU summit. What are we going to see? Are we going to see Angela Merkel, who is insistent that the banks take the bulk of write-downs and haircuts to the bailouts that they've already given to Greece? And on the other side, you've got the ECB, who keep on pushing for the richer nations, such as Germany, to pay up and take the bulk of the losses on these loans. So that contention is set to remain, and as we've seen over the last year or so, it's impossible to see that there's going to be any resolution to the debt crisis. at this one summit meeting tomorrow, but hopefully there'll be progress. It's what the market is crying out for, and we will hopefully see finally a line drawn under this, but we're not holding our breath. That's it as ever. Do give us feedback, media@capitalspreads.com.